Good morning. Welcome to ATI ProMedia. We have an action-packed show. Connor B will be helping guest hosts here in a little bit. Brady Huck is off playing cowboy today. We have exports. And you know what? We should. With prices this low, if we don't start selling to someone, we're going to have a different problem. Interest rates have went back up. In a little bit in the show, we'll show you a chart of that. We had an unemployment number Friday, and we had some verbiage. Of course, our Fed chair, Jay Powell, as you hear so often talked about, was on 60 Minutes last night. Speaking of last night, it was so neat to see Lainey Wilson. Lainey Wilson won a Grammy, and she said, "I'm a fifth, sixth generation farmer. I'm just a farm kid up here accepting this award. I come from a town of 200 people." She talked about farmers for a good minute. I should get that clip, and we should try to air that. It really made me feel good about farming, agriculture, and a small town kid doing well. Markets are pretty hum ho. Corn's down a penny, beans are down a penny, wheats are down 8 to 6. Gold's down, silver's down, hogs are down. Cattle, being cattle, they are up. And what else do we have under the news front? Yields creeping up. Yeah, there's some things happening in world food prices, some things happening in margins um, in hogs. And Tyson had earnings, and I think they did a little better than expected. With that, I welcome Connor B into the show, and I want to congratulate you, Connor. Tomorrow is day 50 of lives, and you were here for the first 30 or 40 before we went live. This is live every day at 9. It's free to the world. The 9 a.m. ATI Pro Media always be free. Thank you. Thank Brady. Thank everyone who's helping. Hey, look at that. Thank you, 5,000 subscribers. It's so important, folks, that you go to YouTube and subscribe, like, hit notifications. It helps us. It helps the algorithm. It helps you catch the show live. Now, of course, we answer to the best of our ability questions live on the show every day. We don't always get to them, but Joe will click them at the end. So welcome, folks, from Facebook, LinkedIn, YouTube, X. And let's get in the meat of the show. I'm going to let you talk. A dear friend of mine said, don't talk over each other. So the stage is yours, my friend.
Okay. Hey, and day 50, time flies when you're having fun, Tommy. But first thing, flash sale, you mentioned it, 155,000 metric tons of corn delivery to Mexico. This is very timely. I think we're a year to the day or close to it where Mexico said they no longer wanted GMO corn. They wanted no GMO corn for their tortillas, for their flour, right? And we were seeing, where is that demand going to go? And a year later, who would have thought we would have had a record export year to Mexico, right? So they haven't stopped buying GMO corn yet. That rhetoric is still ongoing. We'll see if we get any, who's going to bend and who's going to break. But interesting to see with that. And so good to see flash sales. Good to see it. So other thing, Tommy, I'll read it and then let you talk about it. Bond yields around the globe are higher this morning, right? We had Jay Powell come on and say that a rate cut in March was not very likely.
Yeah, we're down to about 36%. We watched that at corporate. We have a Bloomberg terminal, but of course, just the freeway. You can go to CME FedWatch. Just Google CME FedWatch. It's a really great free tool. Just introduced it to some college kids, my daughter's college friends at Kelly Business School in Indiana. They're like, how do you know if interest rates are going to move? I'm like, well, we don't really know, but we know based on percentages, right? So if the Chiefs are favored by 7, someone came up with those odds. What are who is the favorite for the big Sunday game next week?
I think it's pretty close, but I think the Niners are favored by 2 points. It's very close.
And the reason I bring up, favoriting a football team by 5.7 points, Purdue basketball favored by 30, is that someone's making those odds, right? And so when we talk about puts and calls and everything else, there's someone making those odds, the risk taker on the other side of that. Speaking of Super Bowl, over next week, I think is by far the biggest. We consume the most like sour cream, chicken wings. We should do a little chicken wings special. I think maybe Thursday or Friday we'll talk about all the Super Bowl foods, and there's not one of them I don't like.
And next Monday is the biggest day called off work. So if I'm not here Monday, make sure to get on me.
Yeah, and probably that cyber. What is it? You have where everyone goes shopping on Friday after Thanksgiving, but now Cyber Monday is by far one of the most least productive days of work. And you know what? By the way, Facebook Meta's earnings were up 20% on Friday. Even though a lot of work internets don't allow you to do that stuff, there's plenty of people playing on their phone. So anyway, let's do what we do. Grains,
keep going. Well, let's talk bond yields, Tommy. 10-year note, I think, is it still trading right at 4.1%?
Yeah. And I'm going to pop on my, Joe, go ahead. You could do it for me. Pop on my chart. There we go. That's 30-year bond. You could see that rates were a lot higher towards earlier late last year, and then the bond market rallied, which means rates came down. This is the 30-year, but whether it's the 30, the 10, the 2, uh, the 5s, they've all moved. One thing that hasn't moved, Fed fund rate is still high. And when you look at operating notes and stuff, as we come into renewing operating season, we are very much tied to the short end. So when you go to the bank, they don't say, "Oh, the 30-year bonds here, um, your loan is it here, your operating note." And this is where the 30-year bond is. Big sell off the last few days. That is a daily chart. You can see that the bond market across the world's readjusting.
And add a little color on this, Tommy. Going back to October, we saw that drop, had a nice a big recovery, dipped a little bit, and now we're today. Give us just a quick six-month history on this 30-year bond movement.
Well, we had to zap inflation, and the Fed did in my opinion, a good job of doing it. Many of us thought the markets would collapse. The markets haven't necessarily collapsed, and they are what you're going to hear over and over again. They're trying to get to a soft landing. So when the government raises interest rates, it takes 12 to 18 months for that effect to happen, and we're still feeling the effects of it. You got a bank in New York that's having troubles, but most of the banks are fine, right? And some people say the consumers tapped out, but the economy seems to be fine. Anyway, they've quit raising rates. All the talk and rhetoric is when they're going to cut rates and how much.
Yep.
Now, Kashkari came out this morning and he said that things are calming and falling more in line, but I think they're going to stay at a little bit elevated rate for longer, and then swoop, take it down right into the election. And then whoever's ahead of the polls could say, "I did that," right? It'd probably be the president and the current administration, because if you're not the president, you can't take much credit for stuff. There's some politics, but nonetheless, we stayed at too low of a rate for too long all over the world. We folks are coming back to a more normalization. I hope I did a good job. You got any more questions for me? Any hard ones? Speaking of questions, comments, if you're out there in the interweb, give us a question, comment. We'll do our best to answer. If we can't answer, of course, you can email us, info@ATI ProMedia. And if you call 1-855-737-FARM, that line goes directly to my phone, Joe Grisafi's phone, and Gina Grisafi. So you get the Grisafi trifecta if you call 1-855-737-FARM. If you're a client, of course, we're talking to you often, but if you're not, we'd like to try to help you get through this interesting period. What else do we have, my friend?
Absolutely.
Don't want to see
Let's
any other charts?
No, let's jump into grains real quick. First thing we had, World Food Price Index falls to 3-year lows in January. Really, when we look at commodity markets every day, this is not surprising, right? When we have corn, beans, wheat down what they are, but still interesting to see. You've talked about it, especially looking at the current administration and how they want to get food prices low. Well, guess what? We're at a 3-year low, right, Tommy?
Yeah, maybe the shipping costs didn't come out. Trucking, labor is extremely expensive. So maybe the price of that raw good went down, but the kid throwing that box of cereal on the shelf and the guy or gal who delivered it. And I got to tell you, so often when I go to the store now, there's not a lot of people there in the checkout. I remember during Christmas when everyone posted on Facebook annual Walmart bag checkers Christmas party, and like 500,000 people were attending. Because if you go to a lot of these stores, you are the checkout person. I kind of find that interesting. But there's definitely a labor problem. Speaking of labor problems, of all things, I was driving here to my house. I went and worked out this morning, and I heard on RFD TV that there's all these asparagus farmers who can't get labor. They get labor from overseas, and it's a very, very intense harvest. But there's 15,000 people coming over the border a day. But I'm thinking those folks aren't getting in agriculture, and that's going to be talked about a lot more. If you're a small farmer and you have an intense harvest, like a sugar beet harvest, asparagus harvest, any of these specialty crops in like the Michigan area or California, per se. Labor is such a problem. So I don't know what all these people are doing who are coming over, but they're not knocking on farmers' doors and saying, "Can I hire you?" It's a very bizarre situation when it comes to labor and inflation.
Yeah, absolutely. So after that, Tommy, let's do a couple charts and we'll wrap it up. Hog margins, China hog margins. We talked about the demand in China, and so Nate Mangold sent us this great chart and how we can look at where the margins are. And as you can see, we are down significantly from where we've been on the high on the margins. But I do see a little tick up there at the end. So that'd be something to pay attention closely, right? 2-3 weeks ago, maybe, I believe we had the headline where China said they wanted to curb their hog population, reduce that down. And so we'll see what that's doing with margins, and we'll keep an eye on that one.
Yeah, absolutely. Oh, speaking of funds and whatnot, they just keep hitting the gas. They are sitting very comfortable. Almost every single short they have on is profitable, unless it was put on 2 minutes ago. Um, yeah, they're sitting good. That black line is them hitting the gas. Money managers
Yeah.
combine that position, U.S. grains, oilseeds, futures, and options through January 30th, 2024. Do you have any more color to this? I mean, we are at the low
Yes.
end of the range.
Yeah. So surprised to no one, they added to their shorts last week. So I didn't break. I like this one just because it shows us the whole commodity scope. They are very short. But here's some color to add. I was looking at what the record short was for corn and soybeans. So record short for corn, 322,000 contracts money managers put on April of 2019. Soybeans, 168,000 on May of 19. Currently where we sit, 108,000 of soybeans, 280,000 roughly of corn shorts on. So we are getting close to that record short territory, Tommy. And so,
That's interesting.
yeah. And then the other thing I have is just looking at commercial entities in their position, right? The processors, producers, and other end users, right? They've established Friday, they established a small, very small net long position. First time we've seen that since June of 2019. So
It's interesting. I spent last week at the commercial at Advanced Trading Corporate, and it's interesting how there is a chance that a lot of these major grain elevators, they are not touching the grain. When you bought grain, do you call that your handle, right? That you get a handle on the grain? So the
sure.
farmer is holding the grain, and as they leak it out to the end user, the ethanol plants, whatnot, there's a chance that some of these elevators, when they look at the amount of corn they touch this year, it's going to be on a lower number. The American farmer is able to stay and hold corn longer. Doesn't mean it makes them a profit. The flat price might drop $1.25, and then they catch 20 cents carry and 10 cents basis appreciation, but they're still net out $1. But the American farmer, and I said this, and it's not funny anymore. It was never really funny, but when corn was $5 forever, I said the American farmer is going to stay in control of it to the end. And that may be till June, July, August when they run out of space and another big crop comes in. But right now, things look bearish, yet everybody knows that. And there's sometimes good opportunities when everyone is one way or the other. Hey, Joe, let's get that. Just that question, and I'll call Robert back. I don't understand the other one, so I don't even want to try. $15 dozen Krispy Kreme donuts and $6 wheat. Hey, Luke, shoot us another email. I have an ATI Pro sweatshirt for you. I need to know your size, and I also have an ATI Pro Media Cup. You are by far one of our most active question givers or commenter adding to it. And speaking of Luke, cotton was one of the shining stars last week. When you do listen to the ag shows, whatnot, cotton was showing something that looks different than most commodities. With that, I think we end it, and tomorrow will be.
I might
yes,
work
sir.
on a Krispy Kreme chart. We need to see where that's been the past 3 years and see if we have any correlation there.
Yeah, read this good stuff. Tell people how to get a hold of us, and I will end the show.
Yep, we're live every day at 9. We're going to be doing this Thursday. We're going to be doing the USDA report. We'll talk a lot about that this week. But feel free, as Tommy mentioned, give us a call, send us an email. Feel free to listen to us on Apple, Spotify, or YouTube, and we will see everyone tomorrow.
See you, buddy.
Thanks for joining us. We're here every day, 9 a.m. Central. Don't forget to like and subscribe. We'll see you next time.